Hi everyone, welcome to today's video. So let me start today's video by telling you a very fascinating macro story about the world finances in the last 7 years. First graphic is for Greece, and in 2015, Greece became the first developed country in the world to default on its debt. Here is the second graphic for you. It shows that countries like Lebanon and Argentina and a bunch of African countries defaulted on their debt in 2020. Here's the third graphic, which shows that Sri Lanka and Russia very recently defaulted on their debt. Now, if you look around, almost half the world is defaulting on its debt. The world is hitting its all-time high number when it comes to debt. So what is precisely happening in the world? Is it a troublesome situation? Is it going to impact you as an investor? This becomes extremely important point for you to understand. The summary of the video is that the way things are moving, it does not look very promising. You as an investor need to start taking some steps. What steps? I will talk about it in the video. So please watch it. Please share it with your friends. This is a very important video. So let me tell the story in 7 simple points that will help you understand this complex topic in a very easy to understand, intuitive manner. Also, a very big shout out to our sponsors for today. It is Kuku FM. It's a wonderful audio knowledge platform where you can listen to audiobooks, where you can listen to different knowledge oriented shows and enhance your knowledge. I would highly recommend you that you listen to a book called as The Changing World Order by Mr. Ray Dalio. He has covered some of the points that I'm going to talk about today in his book. So it's a wonderful book. I'm linking it in the description box. You can go and check it out. So first and foremost, you need to have a quick understanding about the type of debts that exist in the world. Now, there are thousands of different types of debt, but 3 very important ones are, one is called as household debt, one is called as corporate debt, and one is called as sovereign debt. So let me give you a very quick explainer there. So household debt, very easy to understand. It means that, for example, when people like you and me, we go and borrow money in terms of buying a motorcycle or a fridge or a house or a car, that is a household debt. That is what it means. Essentially, we go to a bank. We say that, hey bank, please give me 1 crore rupee. I want to invest in an asset which does not grow and I would love to give you my EMI. So we keep on giving bank that EMI. This is just a joke. Please don't take it seriously. But the bottom line is that I hope you get the concept of what household debt is. Now, in case we are unable to pay that EMI on a house or EMI on a bike, then the bank people come. They will give you some phone call. They might threaten you first and foremost. If you still don't pay, they will come and take your bike away or come and foreclose your house. This is the recourse measure that is there on household debt. The second key thing is corporate debt. Now, for example, companies like ITC or Bajaj Finance or Bajaj Finserv or HDFC, they sometimes release corporate bonds. Now, corporate bonds, simply what it does is that instead of selling equity in the stock market, because that will lead to loss of outstanding shares for the company goes and raises debt. And that is called as corporate debt. So you as an investor can also invest in corporate debt through bond investing platforms in India. Now, in case the company defaults or if the company goes bankrupt, so a lot of companies in India go bankrupt every year. So in that case, what happens is that this company or that corporate is liquidated. It simply means that, for example, hypothetically speaking, if ITC goes bankrupt, then regulators will sell off the factories, buses, all those different things that ITC owns. They will get a pool of money and they will first return it to bondholders. So this is the liquidation process and the recourse mechanism when it comes to corporate debt. The third type of debt is called as sovereign debt. Sovereign debt simply means that if India is taking a loan, if China is taking a loan, if US is taking a loan at a national level, and that is called as a sovereign debt. Now, who gives this debt? So for example, it can happen that India takes loan from international organizations like IMF, World Bank. That's one option of taking sovereign debt. Other option would be that India can take debt locally also by issuing bonds for its own citizens. So you and I can pay and buy those bonds and government is taking debt from us. Third option could be that India can take loan from China, India can take loan from US and vice versa. So these are some of the options that exist. Now, a very important question that you might ask me is that, okay, what happens if a sovereign country defaults on its debt? For example, if India takes on a lot of debt and if it defaults, what would happen then? So this brings us to point number 2, and I will show you this particular chart for Argentina when it defaulted on its debt. So if you check this chart, this blue chart shows the interest rate or yield of bonds in Argentina. Now, what happens is that every time the country defaults, this spikes up. For example, when IMF bailed out Argentina here, it led to a spike in the interest rate for the Argentinian economy. Now, what does this exactly mean, spike in interest rate? It simply means that the cost of borrowing for Argentina, it goes up. For example, think about it this way, that you take a loan from HDFC Bank and you are unable to pay it, and then bank has to come and foreclose your house or foreclose your bike, and that matter is settled. The second time you go and try to take a loan from ICICI Bank, will you get a worse interest rate for you? The answer is absolutely yes. Why? Because you have already defaulted on a loan. Think about it also from a funny example, that Vijay Mallya took loan once. He ran away to UK. And now if for some weird reason he comes back to India, starts his business again and start taking loan more, will he get the same lucrative deal? I really hope that the answer would be most likely a no. I cannot guarantee it. But the common sense tells us that Vijay Mallya will have a very hard time getting a loan at the same deal. The same applies at a national level, that if a country defaults on its debt, its cost of borrowing, indicated by its 10-year bond yield, it goes up in prices. So it becomes harder and harder for a country to borrow more funds. Now, has the cost of borrowing in India gone up? The answer is yes, it has gone up. In 1991, India came very close to defaulting on its loan. So it's not just about defaulting, it's also about coming close to defaulting. Then also the bond yields get spiked up, and this is the bond yield for Indian bonds as of now. Compare this to US 10-year treasury bonds, you can see that US borrows somewhere between 2 to 3%, and India is borrowing roughly between 7 to 8%. And even if you adjust for a long-term inflation, it is very clear that the cost of capital in a country like India is higher or much higher compared to that in the US. Why is that the case? Because the world believes that US is slightly more stable economy compared to India, and the chances of default in the US is much lower compared to that in India. So every time emerging economies default or come closer to defaulting on their loan, their interest rate spikes or their bond yield spikes. So this becomes the first problem in terms of defaulting on your loan. The second key problem that happens when a sovereign defaults on their loan is the loss of sovereignty. Now, a lot of countries in Asia Pacific and developing parts of the world, they have started to take more and more loans from China. And this trend has continued from roughly 2000 onwards, when China was amping up its economic game. So countries like Sri Lanka, countries like Afghanistan, countries like Nepal, they all took like massive amount of loans from China. Now what is happening is that countries like Pakistan, Sri Lanka, Nepal, they are going bankrupt. In fact, Sri Lanka has defaulted on its loan. Now China has already given a lot of loans to Sri Lanka. Now Sri Lanka will go to China and say that, you know what, China, please forgive my loan or give me like some better deal. I can't pay my loan. What should I be doing? Then China, being China, will say that, you know what, you also start eating back. No, they will not say that. Basically what they will see is that, you know what, whatever infrastructure for which we have given you loans, now we control it. For example, in Sri Lanka, there is a port called as Hambantota Port. Here's a graphic for you. It was built with China's help, and China now exerts a lot of influence and control over it because Sri Lanka is unable to pay its debt. So whenever a sovereign, a country defaults on its loans, two things happen. One is the cost of borrowing for that country goes up massively. And the second is that in some instances, especially when you are taking loans from countries like China, they can exert a lot of influence on you, and they can de facto control your economy. Now comes the third question, that why is it that sovereign countries take loans? Can't they live frugally? Akshat preaches a lot about living frugally. So can't they listen to Akshat? No, they will not listen to Akshat. But the important point or important message here is this, that countries take on loan because of a mathematical equation. And the mathematical equation is this, that in majority of the countries, the expenses are much greater than the income that the country makes. That's first part of the equation. And in every country, they want Vikas, right? They want Vikas, we want development, we want Vikas. People keep on yearning about Vikas, that Vikas is not happening, roads are not getting built. When will Vikas come? When will Vikas come? So the government gets fed up with this nagging, and they end up borrowing money, even from horrible money shark lenders like China. Now the thought process here is fairly simple, that if we take money on debt, and if we undertake development, it will lead to more productivity. For example, more highways, more roads will get built. So more transportation will take place, more business outcome will happen. And as a result, because of the increased and improved GDP, we will be able to pay off debt. But what happens? In this entire game, we miss out on analyzing the caliber of corrupt politicians. They are very crafty, they are very sly in terms of whatever they do. So they are able to siphon off a ton of money, or they will just take money in debt. They will do like freebie economy. Okay, let's distribute like laptops. Let's distribute like lanterns. Nowadays, people are making YouTube videos. So how about we distribute like some iPhones? So all this crazy stuff keeps on happening, and this entire spectrum does not play out. So as a result, a lot of sovereign countries get into debt traps. Now let me talk about point number 4, which is about the two recent cases. One is Sri Lanka defaulting on its debt and Russia defaulting on its debt. Now, in addition to corrupt politics, there are macroeconomic factors at play which have led these countries to default on its debt. So let us very quickly understand that. Now, in case of Sri Lanka, they have defaulted on their debts for a series of reasons. I have covered it on this video here. You can watch it to get a complete understanding. But the synopsis of this is that the commodity prices across the globe are rising. Sri Lanka is a very closed community. So it only exports certain types of raw material. Their imports have been really bad. They are hardly earning any money. There is corrupt politics that is going on. Their GDP is falling and a bunch of bad stuff is happening. Now, the macroeconomic factor at play was that the commodity prices all across the globe have been rising from the COVID times. So there was a COVID shock. There was 2021 Russia-Ukraine crisis shock. So both these shocks have skyrocketed the commodity prices. You can take a look at this particular chart here. So as a result, a destabilized economy like Sri Lanka was not able to suffer this spike in commodity prices and its economy has finally defaulted. An analogous example here would be that if you're a very lazy student, right? You have your class 10th board exam coming up. You don't study, you play PUBG all day. Now there is 1 month left through the exam. You fell ill. So you could not even study Kunji and guides and keys and you could not pass the exam. So same situation is happening with Sri Lanka. That Sri Lanka for a decade now was playing PUBG with its economy. It was not doing anything. It was not expanding upon its tourism. It was not expanding upon its commodities that it could export. Its politics was in shambles. Then macroeconomic crisis also came and Sri Lanka ended up scoring 10 out of 100 marks in maths. So that is what has happened with Sri Lanka. Now what is the case with Russia? Because you will see Russian President Vladimir Putin sitting on a horse shirtless. So he comes like a macho man. So why is he unable to save the economy in Russia and why has Russia defaulted? It is because of sanctions. So Russia, to start off with, it's a very closed economy. It has a lot of natural resources. It can export those natural resources and make money in the process. But because of Russia-Ukraine war, there were a ton of sanctions that were imposed on Russia. So it was not able to get US dollars to pay off its debt because it has to pay off its debt in US dollars. So as a result, Russia defaulted. But in Russia's case, and the strength of Russia's economy is much more powerful compared to something like Sri Lanka or Pakistan. So I hope this reason is clear that for what reasons these sovereigns default on their debt. Now comes the fifth point, that are there other countries at fray which are likely to default? The answer is unfortunately a big yes here. So countries like Pakistan, Nepal, Afghanistan, they are all on verge of bankruptcy. Here is a chart for you which shows that a bunch of African nations are likely to default as well, and that will wreak havoc on the African economy as well. As an interesting point, I would not be surprised if almost 50% of countries in the world end up defaulting in the next 10 years. Why is that the case? Because the world debt is very, very high to begin with as of now. And majority of this debt is denominated in US dollars. So US dollar is going to take a hit because of that. And many of these same countries will go to China, sell off a part of their sovereignty in order to refinance that debt. So that is the entire spectrum of things that is happening. Do countries want to do that? The answer is no. But unfortunately, these countries are left with very little options. Now you will say that, okay, I am sitting in India. Why do I care? I will go to Goa, enjoy sun-kissed beaches and put a tan, do swimming, whatnot. So how does it impact me? It actually impacts you a lot because the single biggest reason for India to grow from 1991 to 2020 was the fact that world was relatively peaceful. Yes, there were a series of incidents that happened between this time frame, but relatively speaking, the world was in a peaceful state. And India liberalized. So there were LPG reforms. Let me know what LPG means. I have taught about it earlier on some of my videos. So India undertook LPG reforms in 1991 and we enjoyed the benefits of it till 2020. So my thinking or my hypothesis is that for India to grow, the world has to grow too. India cannot grow in isolation. So all these different crises do impact us quite a lot. India is not an isolated economy, something like Russia. We do depend a lot on world trade. We do depend a lot on US economy. We do depend a lot on the European economy. So as Indians, we should pray that so all the countries that are being burdened by this mountain of debt, they just figure out a way to get over it. So now comes the sixth point, that what is it precisely that the world needs to do in order to overcome this debt? So go back to that same mathematical equation and you need to reverse it. So first and foremost, your revenue should be greater than your expenses. So we need to be frugal in terms of how the world is spending money. Very, very sensibly we should spend it. Second is that people should not go crazy about Vikas, that we want Vikas in the morning, we want Vikas in the afternoon, we want Vikas at night. No, please don't do that. sensible vikas or sensible growth, if it happens in the world, it is good enough. Please don't run after growth. So it's like me trying to advise people to be moderate. So this thing does not work in a consumeristic world. So unfortunately, I don't think that this will work out, but this is the simple roadmap that revenue should be greater than the expense and people should be sensible when it comes to development. This brings us to the final point, that if you are an investor, what are some of the key things that you should keep in mind, and where is the world going with the high debt? So first and foremost, my advice to you as an investor would be that please be a diversified or a highly diversified investor. I have said it over and over and over and over again. Please be diversified. This is super important. Please be diversified across different asset classes. I will not name one asset class which starts with C and ends with O. You can let me know in the comment what does that mean. But the point being that you need to diversify within different type of companies that you're purchasing. That's point one. Point number two, please do not buy high debt businesses. This is critical. Please do not invest in businesses that are very high debt oriented. You are likely to lose a lot of money because these days 5, 10, 15, 20% correction can happen anytime. Number three, is the bull run intact? The answer is very much yes. It is still intact because I feel that there is a lot of steam left to what central governments can take actions around this, and they will deploy all macro tools that they might have on their hand. And if it leads to genuine growth at some stage, that might save us from this high debt situation, so to speak. Is it likely to happen? My guess is as good as yours. Very difficult to predict. Fourth and final point that you need to keep in mind is that you need to be geographically diversified now. Please don't keep all your money in emerging economies. You need to take positions outside India also. Because in high risk, high debt environment, emerging economies, even for their no fault of their own, they end up taking the most hit. I hope you enjoyed the video. Please press the like button and share it with your friends, and I will see you the next time.